Let me now bring on board Manishi Chaudhary, Managing Director and Head of Research with BNP Paribas, joins us live from Mumbai. Manishi, morning. Thank you for joining us. Manishi, in last 15 days, Indian markets indeed have managed to climb the wall of worries despite a noisy environment and a challenging macro condition. Do you think strength is here to stay?
Well, I think, at least for the medium term, it may continue this way. But this recent rally that we've seen, it's partly on account of a couple of things. Number one, the negatives that had been highlighted, both by economic commentators and in the press, they're now quite well known. The so-called policy paralysis and, the fact that growth is declining, both in GDP and IIP front. These are, they don't really hold any negative surprise anymore. And secondly, I think marginally, even the policy and implementation situation may be improving slightly, particularly on coal and power, that entire area, and possibly on roads and other things, where there was a massive concern about profitability of the bidders being hurt. We're seeing some discipline on that side. So there are some green shoots that are emerging, both on the macroeconomic side and certain sector-specific areas. So I think that's one of the reasons why the market has outperformed. And one must not forget the global issues whereby the commodities, particularly oil and other hard commodities like metals, have declined anywhere between 20 to 30%. Of course, as far as domestic prices are concerned, they're neutralized to a large extent by the rupee depreciation. But they also have an important impact on the current account deficit, and which therefore could lead to a stabilization of the currency at some date. So all of these factors taken together have led to this outperformance. And since many of these factors may last over the short term, I think the market may continue to remain at the present levels for some time.
So Manishi, is it can we safely assume that 4,800 perhaps is the base for the index right now? Or do you think we could see lower levels, given the negatives and given the global situation, which could actually throw up a surprise or a shocker rather?
Right. It's difficult to comment on, how the market would behave in the very short term. 4,800 is close to about 7 to 8% down from here, so it would translate perhaps into about, maybe about 16,000 or, just below that as far as Sensex is concerned. Yeah, I personally think that is close to the bottom where the market could go, because it, coincides with close to about 12 to 12.5 times PE on a one-year forward basis. And that is close to one standard deviation below the long-term mean, which for a very long time we have held that is likely to be the short-term trough as far as valuations are concerned. So yes, I would think that at least in the near term, in the absence of any complete washout or calamitous situation in the European region, possibly that's the near-term bottom for the market.
The shareholders of Sterlite Industries and Sesa, they have approved the merger proposal. If you are a shareholder of Sesa, this is what you get. You get additional holding in KN India, and this is what you lose. Well, you will have a higher interest outgo because of the total debt you would be inheriting. Similarly, if you are a shareholder of Sterlite Industries, you will get a much stronger balance sheet, and also you will have majority ownership in other operating assets. Manishi, have you analyzed the Sterlite and Sesa merger?
No, not really, not in very specific terms. And, I would not comment on stock-specific issues, but I could tell you that as far as the non-ferrous metal side is concerned, we are slightly cautious. In fact, more cautious than on the ferrous metal side. So we don't have any of these, either Sesa or Sterlite, in the model portfolio. And we are relying entirely on stocks like JSPL or Steel Authority of India, as far as the metal side is concerned. And given the global situation, we continue to remain underweight on the metals universe as a whole.
What about valuations, Manishi? If I look at valuations for most of the metal stocks, they are trading at a deep discount. Tata Steel is almost at its book value. Sterlite Industries is now trading below its replacement cost, and ditto when it comes to Hindalco.
Yeah, that's right. In fact, if you look at the metals universe in general, possibly the valuations are, way lower than one standard deviation below mean on any parameter, be it price to book or price to earnings or EV to EBITDA. And in some cases, going close to 2 standard deviations below mean. But at the same time, those earnings estimates have been worked out on the basis of certain assumptions about product prices, which seem to be in question right now. If you look at any of the indices like CRB or the Dow Jones Industrial Metals, in dollar terms, these prices have declined about 25%. In the rupee terms, obviously, the decline would not be as much. In fact, it would hardly be about 5 to 7% perhaps. But it means that as long as Europe and United States continue to be in the state that they are in, and as long as China slows down, and that's a significant joker in the pack at this point of time over which no one has any control, then these prices, particularly the non-ferrous prices which are traded on LME, they could continue to show significant degree of volatility. So, those valuations are predicated on certain assumptions about product prices which may not turn out to be exactly true in the medium-term future. So, even those valuations in times like these need to be taken with a pinch of salt.
Manishi, what is the market pricing in terms of what we could see from Pranab Mukherjee before he resigns? Because, there are indications that perhaps steps would be announced with respect to the economy, in consultation with the RBI. We may see some action on the currency weakness as well, and they are going to step up their reforms and see some, FDI, some cabinet reshuffle, as well as talks of dollar-denominated infra bonds.
Well, it's difficult to take a call on what the market is expecting, but there are a few things that perhaps need to be done from the government side, and they're pretty well known right now. They have been talked about on so many occasions by economists and other commentators. But I think the need of the hour for India is not really any big bang reforms, but to kickstart the projects, infrastructure and otherwise, which have been lying dormant for quite some time. And for that, we need to give approval to these projects in terms of environmental clearances, in terms of facilitating land acquisition. And so therefore, a few steps would possibly be quite welcome at this point of time. And the first of these is perhaps the land acquisition bill, which needs to go through. It would obviously increase the cost of the projects, but at the same time, it would make the land acquisition process for industrial purposes much more regular than what it is right now. GST is definitely another thing that needs to go through to improve or smoothen out the differences that exist between the different state taxes. And finally, I think some of the measures that you talked about, like FDI in retail, and slight readjustment about the tax proposals that were contained in the budget, like GAR. I think it's a good thing that it's been postponed by a year, but some of the more onerous conditions, like putting the burden of proof on the taxpayer, those things clearly need to be changed. And if these things do go through, then the sentiment as far as India is concerned on the part of foreign investors could improve, and we could actually see an improvement apart from the FII portfolio investments in FDI as well. So all these things should, contribute to stabilization of the currency, which, has been one of the biggest bugbears of the equity market in recent times.
Manishi, unfortunately, this year the monsoon progress also has been rather poor. So at these levels, what exactly are markets pricing in when it comes to monsoon? And if monsoon this year fails, I'm keeping my fingers crossed there, do you think we could see a significant amount of collateral damage?
Well, that is a question, honestly, we are also grappling with. It's still early days. The monsoon has just about started for past fortnight or so. And the real sowing season is July, and, it continues till August. And the hopeful sign is that the feeling that we get from the Met Department is that in July and August, it is likely to be in the range of 96 to 98% of the long period average. If that is indeed so, then we have a very good temporal and spatial distribution of monsoon, which would not really affect the crop, and therefore, it would not really affect, food inflation adversely or the rural income levels. But at the same time, if we do have a failed monsoon, hypothetically speaking, at this stage, what you referred to, then it could have, adverse impact on consumption, particularly rural and semi-urban consumption, which is something the economy has been running on. Therefore, some sectors could be disproportionately affected by this. The consumer staples sector is an obvious choice. And remember, this could, it's not just an India-specific thing, it also affects Indonesia, Malaysia, the plantation companies, and therefore, some of the raw materials that we import, like palm oil, those prices could increase. So, consumer staples could be an area of concern. So could be other stocks that are geared towards rural consumption, like Mahindra & Mahindra and two-wheeler companies like Hero Honda or Bajaj. We don't have too many of the consumer staple stocks in our portfolio, so no Unilever or, not even a Nestle. But we do have both M&M and Hero MotoCorp, so, it's a space that we have to watch very keenly.
Manish, what did you make of the cement cartelization report? Because start of the week, last week, these stocks were holding out very well. Do you think they can sort of sail through the penalty damage?
Well, obviously, they're going to file an appeal in the appellate tribunal, which most of the companies have talked about right now. I would not like to take a call on the legal specifics of this, because there are strong arguments both on both sides. The parties who are arguing that there was cartelization and the parties who are arguing that there was none. But what we have to watch out for really is, what comes beyond this phase of litigation. Or in other words, would this verdict impact the ability of the companies to price their product competitively? Would this affect the ability of the companies to increase product prices, at least to neutralize the cost increases that they have? If it does, then this could lead to longer-term derating of the sector. And we must remember that the stocks are not cheap at this point of time. Therefore, just to play safe, we don't really have any of the cement stocks in our model portfolio. We are currently lying underweight on that sector.
Just to mark the absolute picture here, the advanced decline ratio is strong. All sectors are now trading in the green. The metal index is the biggest gainer, followed by price action and real estate. So high beta pockets are making a comeback. And if I look at India versus rest of Asia, where do we stand? We're doing well. In fact, today India is the best performing regional market. Rest of the Asian markets minus Hong Kong, they are trading with a downward bias. Cost is down about 1.5%, but Indian markets are looking strong. Rupee also, largely because of a pep talk from Finance Minister, rupee also has appreciated by about 1%. Manishi, at BNP Paribas, what is your worst case scenario or the bear case scenario for rupee? Do you think we could go below 60?
You see, currently the official forecast is somewhere around 53 for this year. Now it has obviously breached that, and we have a fair value calculation based on purchasing power parity, which tells us that it's possibly somewhere around, that fair value is somewhere around 54 or so. So at somewhere between 56 to 57, the rupee is possibly about 5% undervalued. Now, having said that, the short-term fluctuations in the rupee are not governed by these theoretical purchasing power parity-based fair values, but more by the current account deficit and the inflows, the capital account. And there, the concern is clearly not yet over. So the thing to watch out for is if there is another significant degree of risk contraction, contraction in risk appetite, which leads to funds flowing out of the emerging markets more into the developed markets, like we had seen in the second half of 2011. If that happens, then yes, I mean, theoretically even 60 could be breached, but That is something that's not in our base case right now. We personally think that the rupee would possibly stabilize, at least in the near term, in this 56.5 to 57.5, somewhere in that range.